and you're good to go.
All right. All right, everybody. Bobby Martins here. I am here today with a special guest. This guy is going to blow your mind with tax strategies that will help you save tens of thousands, hundreds of thousands, and add to your overall net worth by basically beating the system a little bit. We all know and have heard about 1031 exchanges and how that can be beneficial to defer your taxes on prime or on investment properties. But there's a huge challenge out there right now where a lot of people over the last 5-6 years have made a ton of money off of their personal properties. And so now they've got, $1 million, $2 million, $3 million in equity growth over the last 5, 6, 7 years in some of these properties. And so how do you sell that property without having to pay hundreds of thousands of dollars in taxes? And so, ladies and gentlemen, without further ado, I'd like to introduce Mr. Brett Swartz, and he's going to go ahead and cover some strategies today that will help with that whole endeavor. So hello, hey, Brett, how's it going?
Bobby, great. Thanks so much for having me here and hosting this little mini podcast and discussion here. And it's it's always great to speak with you and see you. I know we've spent some time together over the years within real estate, within the brokerage we're with. And I'm happy to provide some value today and hopefully excite some people on what's actually possible when exiting, assets that are highly appreciated and they're struggling with the capital gains tax, especially in a place like San Diego. California has a high tax, and that tax can be 33% up to 50% of the gain, depending on if it's a primary home or investment real estate. And people want solutions, especially given the changing market that we're in right now. Values are still doing, I think, relatively holding pretty good, but who knows where they're going to be in a year or two. And people want to move, they want to sell, but they also feeling trapped by the capital gains tax. And so I'm excited to really dive into this discussion with you, Bobby.
Now, is it only on real estate? So if someone comes to me with a bunch of Bitcoin or a bunch of other assets, are you able to do a deferred sales trust on those types of assets?
So it actually works for any asset of any kind, right? Which is really unique because, as you mentioned in the beginning, the 1031 exchange only works for investment real estate. It doesn't work for primary homes. It doesn't work for stock, public or private, cryptocurrency. It doesn't work for business sales. And so what's really unique about our strategy that we use here at Capital Gains Tax Solutions is it works for any asset of any kind. Here's the key, though. It needs to have $1 million net proceeds and $1 million gain. So it's got to be big enough to warrant the service. But as long as it has a large enough gain, we are able to defer the capital gains tax.
Okay, so walk me through like I'm a 5-year-old. What exactly is the process, for doing a deferred sales trust? Is there anything nuances or anything different that we should know about?
Yeah, so the main thing to understand is what are the roles and what's actually happening here. And so the best way to understand this would be if someone owns a home right now, they have a lender. Typically, a lot of them do if they owe money on the house. And that lender has lent them the money, although they own the home. And let's just imagine it's a property they bought in La Jolla, 25 years ago for $1.5 million. And now it's worth, $20 million. And they're looking at, let's just say about an $18.5 million gain. But let's imagine they have, debt on the property for $1 million. When they sell, they pay off the debt and the remainder goes to them. And they would pay tax on that. In this scenario, we actually form a trust, and this trust will actually receive that capital at closing. And the seller in this scenario will receive a promissory note. In other words, they're trading places with the bank, where the bank, they owed $1 million, they will pay off the bank. In this scenario, now they're owed about, let's call it $19 million if they owed $1 million. And they become the bank. And by transitioning from ownership to the bank, they're able to defer the tax using what's called an installment sale. Many investors will know this as a seller carryback. But the difference is we're not carrying back for the ultimate buyer, which Bobby could find and source and represent. It would be for this trust that just does business with the seller. Think of it kind of like an IRA or a 401k, Bobby, right? If you have those, and that the funds can go to this tax vehicle strategy, and it stays in a deferral state until payments start receiving back to them. And then as they receive payments, they'll pay tax. So think of it like a delayed tax trust. I'm delaying receiving what I would have taken at closing, and I'm deferring the tax until I receive payments from it.
Awesome. I love it. I love it. I could, throwing out huge numbers like that, you can really see the value of doing a deferred sales, because you'd be paying, $3, $4, $5 million plus on something like that at least. And so by making that whole number last longer, and then you get the compounded interest and all of that. So wow, that's awesome. Well, any other things that you can add that someone would need to know? I mean, obviously there's probably some other professionals that maybe they need to talk to with that.
Yeah, it's a great question, Bobby. So the biggest thing is we help people by first envisioning where they want to be, where they're trying to go. Mm-hmm. That's the biggest thing for people is, when they go to sell these homes they've been in for a very long time, it's a family legacy. The kids are out of the house. They want to move to a different state. They want to travel more. They want to take what they feel like real estate rich, maybe a little bit cash flow light, right? They want to increase that cash flow. So it's envisioning what kind of freedoms that they're trying to achieve before they move. And so that's part of what we do. We work with amazing professionals, top realtors in the country, to build a team, right? And that's really the second step. And when you build that team and clarify that vision and the freedoms they're trying to achieve, then it's just all about us working together to execute their strategy. And it does take a team of professionals as part of our role. I'm a third-party unrelated trustee, and I train and coach and work with CPAs, financial advisors, real estate professionals like yourself. And then we also invite and want to make sure that we get the blessing of anyone who's cautious and skeptical, as you should be, because these tax deferral strategies are very specific and you got to make sure you do it in the right way. But as long as you can envision what future you want and you can build a team and a strategy or a mixture of strategies, then you can unlock that freedom. And I'll tell you a real story that we used for this up in Palo Alto. In fact, this particular seller of mine, he had 6 kids and his 6 kids were now gone. And this house was worth over $8 million. It was on University Avenue, not too far from Stanford University. And this is his primary home. And so he's also been in the real estate industry for 30 years. He's actually an expert in real estate. And he knew that it didn't qualify for a 1031 exchange. And so he was looking to sell his primary home. Here's the other challenge. He had quite a bit of debt on the property. And this also represented a majority of his net worth. And he's also looking to retire and move out of state. And so some of his freedoms were very clear. One, he wanted to pay off debt. B, he wanted to increase his cash flow. C, he wanted location freedom. D, he wanted some cash flow freedom because it wasn't producing any cash flow. And he wants to be closer to family. So it's kind of like 5 freedoms. And so in one sale, we were able to defer all of his capital gains tax. He was able to pay off all of his debt. He didn't have to put it in like kind real estate under a 45-day window. He didn't qualify anyways because it was a primary home. I mean, he could have potentially rented it out for a couple of years and gone through that. But guess what? A lot of sellers aren't wanting to put a lot of debt in their current circumstances with interest rates being where they're at versus just pricing still staying pretty steady. And so we solved that problem. Now we've gone on to do deals in Saratoga, Monterey, Santa Cruz, of course, San Diego, Los Angeles, Texas, Connecticut, New York, New Jersey, San Francisco, all over. And each individual client has a little bit different freedom they're trying to achieve. And our goal is just to try to work with you, the professional, right? And work with their professionals to clarify what that is, show them what's possible, and then we execute on the strategy. They defer millions of tax. They get to live off the cash flow. They get to diversify their wealth. They get to pay off their debt. Now, some of them are entrepreneurial, Bobby. Some of them are like, I don't want to necessarily be passive. I'm actually an active real estate investor or a business owner that's listening to this. And they might not be selling their primary home right now. Well, that's great. We're entrepreneurs ourselves. We love multifamily syndications and developments. And we're constantly, buying and looking and investing into those types of deals. Now, most of these are out of the state of California for a number of reasons, but mainly because the cash flow and the appreciation seems to be doing pretty good in some other states right now. But it just depends on what the client's trying to achieve. But you can work with active investors or passive investors as well.
Well, what I want to highlight with what you said for anybody listening here is that you don't have to sell a primary residence and then go buy another primary residence to make this happen. You don't have to sell an investment property, go buy another investment property, whatever you're selling, you can go out there and sell that item and invest that profits into whatever you want. So you can split it and dice it up into 20 different investments if you wanted to. Some could be real estate, some could be active, even stocks. If you want to buy a bunch of Apple stock, go for it. It's your money. You get to do what you want. And so that's really what draws me to this, because I see so many people out there struggling, and they're living a life that they shouldn't be living, in agony, where they don't have the cash flow that they want or need. Whereas something like this can change your life completely overnight if you have the equity. If the equity is there, now you're giving yourself, I like to call it the monthly drip, that drip coming in every single month, automatic. And so that's really what draws me to this. And as a wealth builder for my clients, this is my job to make sure that you guys have the absolute best programs out there. And that's why we have 10 different ways to help you buy and sell property. So thank you so much, Brett. I really appreciate you coming in and explaining this. For any of my clients and friends or anybody watching this, feel free to reach out to me directly on my cell. I'd love to get you connected with Brett. We'll do a call with him, and we can walk you through the program a little bit more in detail. But I'll tell you right now, it's a game changer. I've seen it work myself. I'm considering doing it on my primary residence right now, because it just for what you just said, it's all about freedom. We all want that freedom, and you want that stress relief gone in your life. And so if you have the equity and your property isn't fitting your needs anymore, then this is a great vehicle to make it happen. So thanks again, Brett. Appreciate you coming in, and thank you all for watching. Have a great day.
Bye, everybody.